I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. U.S. soybean crushings continued at a record pace in November as domestic demand remains a highlight for the balance sheet. The National Oilseed Processors Association reported that its members crushed 216 million bushels of soybeans last month, up 12% from the same period last year. In October, NOPA members, which represent about 99% of U.S. crush capacity, processed a record 227.6 million bushels. Additionally, year-to-date crushings for the 2025-26 season are running 12% ahead of last year. Record crushings this season have helped offset lower export demand for U.S. soybeans. While exports are forecast to drop 13% from last year, total demand is expected to decline by just 3% due to the growth in domestic processing. Large global supplies have been a limiting factor for the U.S. wheat markets this year as multiple countries saw significant production growth. Favorable weather and increased acreage in some regions helped push crop estimates well above initial expectations. According to the Buenos Aires Grain Exchange, Argentina is expected to harvest a record 25.5 million metric tons of wheat this season. Good weather drove higher plantings and pushed yields well above previous seasons. Additionally, Statistics Canada recently boosted the country's wheat estimate to a record 40 million metric tons. Again, higher planted acreage and better than expected weather drove the increase. Relatively strong crops out of the U.S., Russia, Australia, and the European Union have helped drive global production to a record 838 million metric tons. A global oversupply of wheat has been pressuring markets over the past year. Chicago wheat futures fell to a fresh life of contract low this week as the market digests strong global production. U.S. exports, however, have benefited from lower prices and higher exportable supplies. The latest export inspections data from the USDA shows that wheat shipments are running at the fastest pace since 2013. Even while tight cattle supplies drive cattle slaughter lower this year, higher weights could continue to provide some buffer in beef production. The USDA's December WASDE report released last week revised its 2025 and 2026 beef production forecast higher. USDA's World Agricultural Outlook Board Chair Mark Jekanowski says producers have relied on higher weights to make up for those tighter supplies.
That increase reflects almost entirely just the effect of heavier weights. So given that our inventories are constrained and not growing, the main way the industry has now to increase beef production is to produce heavier animals.
Weekly cattle slaughter data shows that dressed steer weights have averaged well above last year and the 5-year average. Weights climbed as high as 988 pounds in December, knocking on the door of 1,000 pounds. Despite larger weights, beef production this year is forecast to be the lowest since 2017. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.